Hello traders and welcome to another weekly market forecast video. Let's get straight into it. So as we have said from the last week, heading into the middle of the month, we have been expecting the dollar to start reacting. Of course, this does not mean that the market cannot make another high before it falls. So this is something that you have to be mindful when you're trading. If you don't have a system, you need to learn first how to execute things, and obviously this is something we can help you within our membership service, which you can find with the link in the description. So heading into this week and the week after, we are entering a period in which we might still see choppiness in the market. We must remember that the bigger direction of the dollar should be a reaction to the downside. This might have already been the high from the 13th of January. However, you have to be mindful that another high is still possible before we see a reaction. So the bigger bias will be still to the downside, and we should be looking to come back down to at least the levels from the beginning of December at the 105 area for the list. So this is a roadmap for you heading into the next week and the week after in terms of the dollar itself. For the dollar yen, we have made the break to the downside as we expected. This was the first reaction of the market, as we have been saying. Now the market here, it looks for a possible consolidation or bounce before it drops further, as we are expecting together with the dollar index. So this is what we should be looking for in terms of the dollar yen heading into the next week onwards. So of course, in the beginning of the week, we might still extend to the upside, right, before we start falling. So as we said, this was some sort of an ending structure before the market would have produced this move to the downside. Obviously, this is not the best time to trade this one. So overall bias still remains to the downside for the dollar yen. The euro, as we have said from the last week, it was entering into a stage between buyers and sellers. We'll be fighting here for the reaction to the upside. So we are at this stage in which we are looking for the move higher, as we have been saying. So the market here can still give us some volatility before it resolves to the upside. So this is what you should be having in mind entering the week after, with of course another possibility for a quick spike before the reversal. This is also part of the possibilities in the euro. So bigger move still to the upside regardless of the short-term volatility or outcome from the euro. The pound, same thing. Still, we're expecting the market to start giving us a reaction to the upside. So regardless of the short-term volatility, as we said also from the previous week, we have said that the market can still go to the downside before this reaction, which we have opened the week lower, we reacted higher, and now we have entered the stage between this volatility that should have a move to the upside. So this is what you should keep in mind, that pound dollar is also a pair in which the bigger direction would be to the upside very soon. And if you are trading it, you need to have your own way of trading it. If you don't know, then of course we can help you out. If you are a member, you can ask us any questions throughout our live analysis sessions. The link is in the description. Now for gold, as you have remembered, we have expected gold after this pullback right here to continue to the upside. So we can see right now that buyers are accumulating the market higher for a big move to the upside. At the moment, of course, we can also get some volatility again before a break to the upside. So traders should have this in mind, because at the end of the day, this is not a level to chase the market higher. Buyers have entered here at the middle of November and here at the end of the year and the week before Christmas. So these two were the buying areas for gold. So as I said before, it's very important, if you want to trade the market, to have a way that you can enter the market at extreme prices and levels in which the market creates pivots. And if you don't know how to do that, it's very reasonable. You don't know because you have got the wrong education. This is something we can teach you if you decide to join us throughout our membership service at the end of the day. So expectations here, the market is still in control from the buyers, and we would not be surprised also if the week starts with a big move to the upside, consolidation, and a bigger move to the upside. That's one of the possibilities. And another of the possibilities is a move to the upside, consolidation for a week or so before the next move to the upside is also something we might be expecting. So as far as we trade above these pivots from the end of the year, gold should be able to extend higher, and ideally needs to see one more new all-time high, and this can be anywhere between 2,900 to 3,000 area. So the short-term path, it can play many different variables, but the most important thing if you want to be successful in your trading is to be in the market at the right prices and at the best times possible. And this is only possible if you really want to learn how to analyze the market properly, and this is something we can help you if you decide to do so. So bias for gold, bullish, not looking for any major moves to the downside. So let's see how the next week is going to play out. Now for oil, we have got, as we expected, even from weeks before, we expected this reaction to the upside to the 74-73 area. We had a minor area of reaction, which the market consolidated. This was a clear sign that the market was correcting here for one more push to the upside, which we have extended to the bigger area of reaction, let's say, at the $80 area, in which the oil at this stage is still in an area and situation in which it can easily turn again to the downside and give us a bearish cycle. So this is something for traders to keep in mind. This is a huge possible selling area at this point. So it's very important to see what the market will do at least in the next 2 weeks before traders can make any further decisions. At these levels, we have got the clear signs that the move to the upside was going to take place. This was a time for buying, let's say. Now the market is trapped and we can see bigger risks to the downside than to the upside for oil. So keep that in mind. If you trade oil, this is not the best time to do so. Now back with another update for gas. As we had 2 weeks ago, we explained the importance of the $4 area and how this was a take profit area from the buyers. There is a reason why the market has stalled exactly at this area. And the bigger risk at the moment is a bigger reaction to the downside and more choppiness in the market before any potential moves to the upside. For the time being, right here, the market is trapped and the bigger risks are to the downside rather than to any further upside. There is a big reason why the market stopped here. There is no further interest for higher prices, as you can see. And also, we are sharing more in-depth analysis to our members. They know exactly what we are talking about. So if you want to get these details and why the market is stalling at certain areas, we can provide that to you within our service, which you can check out with the link in the description. So gas right here, the next 2 weeks, they will define the path. So it's very important, the pivot from the 4th of December. If this pivot is showing weakness, then we can see extended consolidation in natural gas, in which is not going to provide any significant direction in the near future. Now from the indices, the S&P 500 SPX cash index, as we have explained also to our members, we expected here this consolidation to finish soon. We have also filled this gap right here with another possible pivotal moment of the market. So the most aggressive view that we can see is in all-time highs very soon. So short term, we might still see some volatility and consolidation before a move to the upside. However, at these areas, the market is riskier. So this is something that traders need to keep in mind. And ideally, this is not the best time to take risks in terms of the S&P 500. And let's see, because this consolidation can even extend to something more choppy and more sideways before a resolution to the upside. So this is the risk for chasing this market higher at this stage of time. Now for Bitcoin, as we have also explained before, we expected here the market to provide us with a pullback, which it has done so. This fake out move here on the 13th of January was a typical fake out move for a big reaction, as we have seen. We had also possibilities to even make a further extension higher and tap the next area of interest before the market would have provided the reaction anyway. So this is why we have been still biased to the upside for Bitcoin for new all-time highs. So let's see what the next week is going to bring. Still, we are expecting the market to provide us with further moves to the upside, but also we cannot deny possibilities of further potential accumulation before the move. So this is something that shorter term traders should understand, that these type of situations you should not be taking big risks, and you should actually learn how to get positioned in the market ahead of time. And ideally, in volatile markets, you do not trade in the short term, but rather you have a specific time that you are positioned ahead of time. So this is what we have for this weekend's market forecast. So hopefully everybody has enjoyed it, and don't forget to leave us a like. This can help us to get to more people out there. So we would like to wish you a great rest of your weekend, and we'll see you in the next video. Stay tuned until then. Take care.